Welcome back, folks. The Dow right now is down 207. You get the Nasdaq off 25. S&P's off 11.5, and it's Wednesday and it's oil day, right?
That's right. So it's 10. What time is this? 10:18. Yeah, 10:18 Eastern time. We have less than 12 minutes till we get those EIA crude oil reports for the inventory for the week. Pulled up crude oil on the Nadex platform. We're trading right now 61.888, 61.88. And let's jump around to some of these spreads, all right? So we're going to start off. I pulled up, we're in commodity spreads, crude oil. I jumped to the 11 a.m.s. So again, the underlying contract right now trading 61.88. Sometimes what we do, we like to take a look at maybe the volatility trade, right, having a bullish spread and a bearish spread. So in this instance, right, we have multiple choices here for the 11 a.m. expirations. We have one spread that we could go from 61.50, okay? So that would give us where the bullish spread is going to have intrinsic value of almost like 40 cents, right? Because 61.50 up to 63. Contracts right now at 61.91. And then on the, if you want to go a little bit higher, so, you know, this is where it's going to be a little bit of an education here, because when we like to make these trades originally, it's when the price of oil is right at 61.50, right? So if it's right at 61.50, there's no intrinsic value on either side of this spread.
And it's moved so much in the last even half hour.
Well, that's why, yeah. So these are 9 till 11. They're going to get set just prior to 9. And if you see where this was trading at, up at around 9 o'clock, we're up at almost 62.40. And that's why 62.25, I think, was where these got set for the middle. And that's where the very middle spread, 61.50 to 63, the square middle, that's 62.25. So just to give your options here, right? So 61.50 up to 63. If you're going to purchase this, it's costing you $45.
Yeah.
Of that, $38 is going to be intrinsic value. So you're paying about $7 or 7 pennies in premium. Now, what's interesting is if you just want to go bullish here, right?
Right.
That's not a bad trade as well. You know, where you have defined risk down to 61.50, you have profit potential up to 63, and for that risk reward, you're paying a slight premium of about 7 pennies.
Right.
And, you know, so, you know, if you wanted to make a similar trade on the bearish side so that you had volatility anywhere away from 61.50, then this is the one that's going to be dramatically out of the money by about 38 cents. So it's just going to be premium. And what's cool here is it's a similar amount of premium. You know, it's $7 or $8 of premium here, but you're paying for the intrinsic value on this side. So you can see that on this trade, you're starting with a lot of intrinsic value to the bullish side, right? If you need to break even here, you need to make up both sides of this trade, so call it $53 away from 61.50. So you need to trade up to above 62, and you're only about 11 pennies away on the bullish side.
Pretty cool, right?
So what if you were bearish?
If you're bullish, that's cool.
Right. If you had a bullish bias, you know, and you're looking for volatility, you want to have exposure to both directions, but realistically you have a bullish bias, that's not a bad trade. Now, what if you had the similar mentality, but you're bearish, right? And that's where this lines up nice as well. You would just choose potentially the 62.25, okay?
Yeah.
And here's where the bearish one goes from 62.25 down to 60.75. Now this is where selling this, you're going to have all your intrinsic value of 35 cents underneath the ceiling of that from 62.25 down to 61.90, call it, 61.89. And that's why this one, pretty similar, right? Pretty cool. The other one, the bullish one, was costing us 43. This one, it's costing us 43 for the same reason. You have about 35 cents of intrinsic value. You get about 8 cents, $8 in premium. And then on the flip side, you're going to have your bullish one that starts at 62.25, about 35 cents out of the money. Super similar, right? Same exact trade.
Look at that.
Different comparisons. This one using 60.
Exact same number, too.
Yeah, and it's what's nice is that they line up literally where 61.90 is almost dead in the middle between 61.50 and 62.25.
Right.
So you're just flipping what point you're kind of buying and selling that volatility at. So those are the 11 a.m.s, okay? Now the 12 o'clocks line up with the same price points, okay? So let's just say that you want to make that bullish bias trade, okay? So we were getting in at 61.50 being the bullish trade. Now you can see a little bit more expensive, right? Because you're paying until 12. That's the only difference.
Not bad though, only $3.
And then on the same way, you would be looking for the bearish one. It's going to be a little bit more expensive. Similar action there.
Must be another bid now.
Yeah, that's jumping around as we speak because that should be a little bit cheaper usually. We'll pull it up. One last one I want to go through because we have 7 minutes until is the dailies.
Right.
So this lines up a little bit closer. A little bit less intrinsic value here, which is nice.
Okay.
Because, and you have till 2:30 and the daily ones are $5 spreads.
Right.
So these we're looking at were $1.50. You're now going to have $5 of potential profit. If oil moved $5 in one day, God knows what would be happening in the world right now, right?
Yeah.
Seriously. But again, you line up a bullish and a bearish spread. Now again, you could just take one side of this, and I bring it up just because 62 to 67, you're only paying 23 cents. You're getting in about 30 cents above market. You have till 2:30.
That's pretty. That's
yeah,
awesome.
and numbers are about to break right now,
Right.
and you could get. Realistically, a $2 move is very realistic in what we've been getting, let alone, you don't need the full 5. But I just want to bring up both. So here's your bullish spread. That's all premium. The bearish one's going to have about 12 cents of intrinsic value. It's going to be a little bit more expensive. But you can see this one lines up at about 59. And again,
that's not bad.
It's not bad.
It was 47 for the 11.
Was.
No,
now
the 12.
Yep.
Yeah.
For both of them almost.
Yeah,
it was pretty close.
Right.
And that's where you had more intrinsic value, though. So on this one, you're about 11 pennies away from 62.
Yeah.
So you need to make up that combined value, call it $59, away from 62. So you're going to need about 60 cents in movement away from 62. But you have till 2:30.
Huge.
And you have that $5 of potential profit if it comes in.
Yeah.
So 61.89 right now. And we got about 5 minutes until that news breaks.
Okay, so
You wanna
let's
jump
go.
around? Go
Yeah,
for it.
ExxonMobil. It's interesting that thing come out with numbers that's getting smoked this morning. So look at this.
Okay.
That's going after its swing low. Now this is a big heads up for the market in general. 73. Hit 74.12. Bottom line is that it's going after it. So let's go into the oil contract itself. Let's see. We got. Okay, so I'm looking at the J contract.
Which is April. That's what we're looking at in Nadex as well.
And intraday. Okay, so let's take a look at. Oh, don't do this to me. Okay, 1 second. Let's go do it again. There we go.
And that is the price movement we saw.
Yeah.
We're up to 62.50, down just under 62 now.
So this is interesting. So I would be bearish because that leg down. Look at that volume. That to me that wants to get tested, which is the 61.65 down there.
Okay. And for the purposes, we're just walking through each trade. You could be bearish. Somebody could be bullish.
Oh,
you know what I
sure.
mean?
Right.
We're just walking through each side.
Right.
Everybody's going to have their market biases,
Right.
and that's why
what's so cool about
we
it.
put out both sides of the trade. Where you are. So if somebody walks into that trade with a slight bearish to pull it back up, the ones that we were looking at potentially, right? When we were looking at, let's even say the 12 o'clocks, well, if you're slightly bearish, you might want to be paying for intrinsic value to the bearish side, right? So that's where maybe...
bullish, just the opposite.
Exactly.
Right.
So that's where maybe you'd use the 62.25 as your point, because then coming into the bearish side, that's going to be where you have value, because you're within the spread to the bearish side. You're selling that, costing you 44. On the bullish side, that is the one that's all premium.
Yeah.
And so that's going to cost you about 15. So again, 58, 59.
And
These are
that's
the
the
12s.
noon.
These are the
Okay,
12s. So you need 60 cents of movement away from that 62.25 point in either direction. But we call it a slightly bearish because you have such a head start to the bearish side. So we'll come back. We'll see what happens.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials right now. They are trading down 149. Nasdaq's off 7. S&Ps are down 6. We'll come right back. Welcome back, folks. So let's see. We get gasoline inventories fell 780,000 barrels.
The headline number there we're looking for, right? Crude oil rising 2.4 million barrels. So there's a bunch of estimates that come out, right? But one of them, in terms of median analyst estimates, so forth, but a good gauge. Whisper numbers are in. Bloomberg users expecting a build of about 2 million barrels. So pretty close in line. And here's kind of the numbers before we jump back to the chart. Cushing crude declining 605,000 barrels. PAD 3 crude plus 2.5 million barrels. Gasoline, check out the difference there, though. Minus 788 versus the estimate of an increase of 1.5.
Yeah.
Distillates minus about 600,000, call it, versus an estimate of a decline of about 1 million. So let's jump back to the Nadex platform. Check out what's happening in that oil contract. We'll pull up the chart, and we have gotten quite a little bid. So from that, we saw trading just under, call it 61.90, give or take, was where we were. We're up about 30 pennies from there, 62.25. Now, looking for a bearish one, that would have been a little tough, right? Because this would have been our 62.25, if we recall. This was the one that had all the intrinsic value in it, right? Because we were down at about 61.90. From there, though, we're back now. What's what would be most unfortunate right now is that if this trade, your max loss is at 62.25 if we had taken both of these, right?
Right.
Because you're selling a spread that goes from 62.25 down to 60.75. You're buying a spread, and that's if you do both legs.
That's right.
That goes from 62.25 up to 63.75. So you have value away from 62.25. So your max loss is actually right at 62.25. Right. And we're within a few pennies of there. Now, the flip side, though, if you had taken the bullish position, right, that was 61.50 was going to be the potential trade there. And that's why we were going to have the value of 61.50, having the 35 to 40 cents of intrinsic value.
Right.
And again, this would be the one where you'd have your value now to the upside. Your bearish spread would be completely out of the money, obviously. And, you know, if you wanted to close that out right now, so you're looking at $72.
Which cost you
43, 47, depending on which time. We're looking at the 12.
47.
Yeah.
Right. That's still great.
Yes. No, definitely. And that's where, you know, that way you just, you know, you have your options, you get it figured out. And then let's just jump back to, before we jump around, the 230s. Those are the ones where 62 is going to be our point, right? So 62, we would have been buying the bullish one, selling the bearish one, $5 in each direction. And that one was costing us about 60 cents. For the full day, both options.
Yep.
And right now, we need a little bit more action in that, you know, for sure, because you're paying till 2:30. But you can see that even putting up
a long time.
Yeah, even putting up $60, which represents 60 cents of movement away from 62. We're close, and we have some action, which is what you'd want. And like we've said, you know, oil, just to take a look at the chart, I mean, you want some volatility, man. We're up at 63. We're down at 61.50. The day is young, exactly.
No doubt.
We'll check back in and see where it goes.
Pretty wild, man.
Yes.
You got to love the movement in it. There's no doubt about it.
Yes, it sure is. So check that out. Right back here, we're looking at 5-minute bars. So it's 10:42 right now. We've had about 12 minutes since that news came out with the crude oil EIA report. And from there, we're continuing to get a bid. We're trading at about 61.90. We're up to above 62.50 currently, and we are climbing. So I just pulled up. Even if we had made the trade with 62.25, which was the one maybe if you were bearish you were looking at, right? You're going to have, I mean, there's still considerable value here to the upside with that move. And this is why, wild, you know, you could still make the trade with both sides of it. You're making it with a bearish bias. Maybe in that case we had walked through. But that's why you might like to make it, but still be looking for a pop on that news if you think the premium is worth paying for on both sides. And just to illustrate, you know, this still has about $29, $30 in value right now as we look at it. That trade was going to cost us about $50 for both sides of both contracts. So this is something that you can trade out of throughout the day, right? I mean, you could, let's say, that might be the opportunity to say, listen, I was looking for the bearish side, right? I'm going to cut my losses here.
Exactly.
I'm going to take $30 off the table. That full trade is going to cost me $20 maybe, you know, with commissions on both sides. And then you live for another day, right? And then, you know, when you do get the explosion, to the downside, because we've gotten 60 cents of movement. You know, if we got that same 60 cents of movement to the downside from 61.90, you'd be trading at 61.30. You'd almost have a full dollar, which would be $100 in value, which would almost be 100% profit. So you can see how you can manage that trade. And as we speak, you know, it's continuing to climb. And so on these 11s and 12s, you have profit potential all the way up to 63.75, and that is not out of the realm with a good hour and 15 minutes left.
And you know what's intriguing today is that if we go to the daily spreads, you know, it's not going to go $5, but guess what? You move that much already.
Oh, for sure.
This thing could flip around and
oil's
go
been
another
volatile,
75.
just in general, let alone having you know, the crude oil inventory numbers coming out on a daily basis. Crude's jumping $1 or $2. Standard. Just like the market's jumping 200 to 400.
Totally.
And crude oil. So if you were with us at 10:30 Eastern Time, Tom and I on the air live for those EIA numbers, one of those trades we went through, pretty interesting what's going on here. So the market was at 61.90 before the crude oil EIA number was released. Trades up to 62.60. We were looking at potential volatility trades, maybe using 62.25 with our pivot point in each direction. You could have, we talked about, you could have maybe taken off the trade when it traded higher if you were bearish. Now, one thing we just want to point out, because, man, this move right until 12 o'clock, you still would have had your bearish spread possibly open from 62.25 down to 60.75, and this just expired at 61.10. 110. So that would have been $110 in value for that bearish spread if you had kept that open, even closing out the bullish spread, maybe taking a small loss on the upside. Pretty remarkable move either way in crude oil.